putting in the cash in hand, also the inventory, and return outwards. I'm just reading from right over here. So just put them like that. So here, allow me to put it like that. Excuse me for that. Just put it like this so that I can maybe perhaps, yeah, that should be fine. So the cash in hand is 3,000. You can see it's right here. That's what we want. And we also put the inventory, current asset, right there, 18,100. Return outwards, returning goods to the suppliers. So it should be here. Return outwards, 1,500. Return inwards should now be inwards. We talk about 3,250. Then ordinary share capital is usually have a credit balance. So we're saying we're going to put the value here, 12,000 like that. And then once we have the ordinary share capital, we proceed on to look at, do we have preference share capital? Yeah, most of these will actually be there. So you can just drag them down sort of like that. And here maybe we can put it like that. Here, 10% preference share capital, and we're saying it's going to be credit. So it's going to be credit. We just pull it like that down, 5,800. And then long-term debt, it's long-term debt, so it should also be there. Long-term debt, and also the sales should also be on that side. But the purchases should be on this other side over here, on the debit side over here. And you're seeing the purchases will be this value here, 51,500, like that. Then we go back, bank overdraft. So it's going to be a component that's going to be come here. So this one over here, we delete at the 3,000. And then we also have this discount received. And then discount allowed should also be on this side here. Discount allowed is here of 300. Then we have buildings at cost. It's usually a debit, yes, it's a debit. And also heavy machinery at cost should also be a debit given to us there. Let me just hide these columns like that, so that I can be able to at least give it better visuals like that. Yeah, that's much better. And then what else do you have? Accumulated depreciation is credit, yes. So we put the credit right here, accumulated depreciation of that, 5950. And then accumulated depreciation, yes, should also be credit balance like that. And we're saying that after accumulated depreciation, what are we talking about? All of these should actually be the audit fees. Yes, we do not want the additional information, delete. Don't want that. So after that, the audit fees is how much we pay outside over here. So the audit fees should be a debit balance, yeah. Yes, audit fees 11,262. And then administrative expenses are always considered to be, including the write-off, it's going to be obviously a debit. Allowances for doubtful debts is credit, is usually a credit balance there. So we put allowances of 300 right there. And then allowances for both, then retained profit has got credit balances. So we sort of put it like that. And then we analyze and see if, is there anything else? No, that's it. So if I've made an error somewhere here, then it will actually be seen. So let me get the balancing figure right over here. So I can just come right down here. Sum alt equals, I want to go all the way up right there. So crossing fingers and toes. No, I'm just joking, guys. Here at Manifested Publishers, we don't cross our fingers and toes. Here we are sure that it's going to actually balance off like that. So you can see, Control V, that it's actually balanced off very well. Now then, the interesting bit is now to come up with the adjustments or to analyze the adjustments item by item there. So let's proceed on and analyze item by item. So here you can see there's a write-up over here up to here, so I need to push it like that. As at 31st December 2023, accounts receivable balance included 250,000 due from a customer who has been declared bankrupt, while accounts payable was found to be overstated by 150,000. So here, accounts payable, we are going to make adjustments based on this 150,000 because it was overstated, so we need to reduce it by 150,000. How do we do that? We come over here because it has got a credit balance payable. So here adjustment should be, we adjust it by 150,000. That's so we reduce it because it's credit balance, we reduce it by 150,000 there. Let's proceed on to the accounts receivable there. For the accounts receivable, it's still on the same statement there, or the same additional information. Accounts receivable balance of 250,000 due from a customer who had been declared bankrupt, while accounts payable was found to have been overstated by to be overstated by 150,000. So we'll need to put in the 250,000 under the accounts receivable. Let's see if there's any other amount that we need to adjust over here. So allowance for doubtful debts will be 3% account. Allowance for doubtful debts is to be adjusted to 3% of accounts receivable as at 31st December 2023. So 31st December, we had prepayments of 50 and 75. That's okay. Advertisement expenses. For the same period, accrued amount was 120,000. The company paid due interest on long-term debt of 7th January 2024. Depreciation is given to us there. This is a preference dividends. The company maintains a gross profit margin of 25%. Having been made aware of the significant changes in the ERP system, the CFO position, and business routes, you are concerned about the materiality assessment, the audit. So there is no other adjustment that we need to make. So here we are making an adjustment of 250,000 right over here, accounts receivable. So 250,000. Put it like that. And then we analyze other adjustments, try and analyze other adjustments which have been given to us over there. So let's look at depreciation, accumulated depreciation. Let's look at that first. What is accumulated depreciation? So depreciation provided as follows. So we're saying the accumulated depreciation has got our working, or would require us to base it on depreciation of machinery. Depreciation. So we're saying that 5% per annum on cost for building. So 5% per annum on cost is 5% of which value? 5% of building on cost is here. So we have it here like this. So we have right here the adjustments for accumulated depreciation right here. And we are saying that it's going to accumulated depreciation is going to be credit right over here. So it's going to be 5%. Where are we getting the 5% from? We are getting the 5% from here. Depreciation was provided as follows. Building 5% per annum on cost. So where is the cost value? We've been given the cost value over here of 64,940 right over here. So 5% of 64,940 on cost. You can see building on cost. So it's going to be that. It's going to be plus times 64,940. That is what you're going to get as our depreciation there. Accumulated depreciation for building. Let's also analyze accumulated depreciation on heavy machinery. Let's see what we are told. So this one for depreciation right over here should actually be indicated that it's being done. Heavy machinery is 10% per annum on reducing balance. 10% per annum. So here, what do? We just pick 10%. 10% per annum. 10% of the difference between, is usually the difference between the machinery at cost and the accumulated depreciation. So this is what I'm saying. We are going to pick the accumulated depreciation right over here for heavy machinery as 10% multiplied by the difference between the machinery, heavy machinery at cost value. That one, we subtract the accumulated depreciation. The accumulated depreciation for heavy machinery right there. Reducing balance. It's not straight line like the way we did it over here. This is reducing balance. I'm getting 820. Now we can move ahead and analyze other costs, other adjustments. We're saying that these significant changes, no, we can come over here and analyze number 3. Yes, let's look at number 3. As of 31st December 2023, there were payments of 50,000 and 75,000 towards administrative and advertisement expenses, respectively. We're going to come to that. For the same period, there was an accrued amount of 120,000 towards audit fees. So audit fees right over here, and you can see 120,000 towards audit fees over here. I can highlight that one with your permission, do it like that, and then we say that this audit fees is going to be 120,000. 120 right there. Once we have 120, we can now come to administrative expenses, because I wanted to move systematically there. So don't worry, we're going to analyze each and everything. So administrative expenses, here we go now. Can put it up to there. As of 31st December 2023, there were payments of 50,000 and 75,000 towards administrative and advertisements expenses, respectively. So that one is done. So we just put it. Is it debit? These are towards payments. So you're saying the payments should be down, should be credited right over here. There's 50 and 75. 75 per there. Of course, these ones will have to be totals like that, no problem. But you're going to, of course, adjust them. There are some adjustments which you need to make. So the 50 and 75 have been considered. And you're saying that we'll also proceed on to analyze other changes right over here. Let's go to note number 1. As of 31st December 2023, accounts receivable balance included 250,000 due from a customer who had been declared bankrupt. So what do we do there? We can then consider bad debts written off and put the 250. Initially it was declared bankrupt, so bad debts written off. We written off that one. Bad debts written off, so we can put the 250. This was accounts receivable. It was initially put as accounts receivable, so we are saying that now it's going to be bad debts written off right over here as 250. So we link it with this one there, that. And we are saying that 250, yes, that's okay. So we check any other item over here. Due from a customer who had been declared bankrupt while accounts payable. This one we've already done the 150. No problem there. Now we're saying we'll need to also provide for allowance for doubtful debts. Allowance for doubtful debts. How do we provide allowance for doubtful debts? We can just maybe perhaps try and analyze this allowance for doubtful debts a little later on. So let's first of all leave it. Then here we can talk about the retained profits. Anything about retained profits that we've been told there? So allowance for doubtful debts is just to be 3% of accounts, or 3% of accounts receivable as at 31st December 2023. So let me see 3% of accounts receivable. Allowance for doubtful debts. 3%. So let's see. 3%. It's going to be 3%. So times accounts receivable. Like that. Just check again what they're saying. Allowance for doubtful debts to be adjusted to 3% of accounts receivable as of 31st December 2023. 3% of accounts receivable 2023. So I can first of all maybe ignore that for the time being. And then you're seeing retained profits. Let's see what the retained profits, we're told about the retained profits first. So the company paid due interest on long-term debt first on 7th January 2024. And then the company's annual general meeting resolved that preference dividend on ordinary share, and 3 million to be transferred to general reserves. So this is what we're saying we're going to consider as part of our retained profits. So 3,000 comes over here. 3,000. And once we have that, of course, we're going to put it in all of these formats over here. That. Once we have that, then we need to check whether there's an increase in provisions or a decrease in provisions. Let's see the increase in provisions or the decrease in provisions. So the increase in provisions, we are comparing the doubtful debts right over here. So allowance for doubtful debts, and then we are saying that now once we get this figure of 3,000 right over here, we can be able to make adjustments based on the increase in provisions right there. So we can write over here increase in provisions. Provisions right over here. And we state right over here that the increase in provisions is going to be given by based on, I can go back to the information right over here, guys, and you can see that of course we've got the amount, the allowance for doubtful debts, which has been given over here, which is 300, and we have it, you can see it's given to us over here. So we'll pick the 300, the increase in provisions right over here. We're saying it's just going to be down over here. We'll pick the 300 like that, and then we subtract. Remember, we have been told something, that we've been told that there's going to be discount received over 522 like that. So the difference between the discount received, so we pick the discount received and we subtract the allowance for doubtful debts right over here, 300, like that. Not the 300, excuse me. We subtract, or rather, we pick the 522 right over here, that value of the discount received, like that. And then we are saying we subtract this allowance for doubtful debts right over here, 300, like that. We should be able to get now that value of 222. So that 222, we are saying we will need to pick this 300 and subtract the 222. That we get 78, increase in provisions. So we are saying right over here that there is the discount allowed. So we pick the 522 and we subtract that value, you get 222. So from the 300 which we allow, we subtract the 222, which is the difference between this minus that, we should be able to determine the provision. Here we are saying we have the increase in provision as being 78. So maybe perhaps I can just demarcate them like so. I can just separate them like that. Then this one also comes like that. Using a thick border, that can be okay. Thick border, of course, this one can be, we can put thick border and then outside border like that. Once we have the increase in provisions like so, we can get the accounts payable adjustment figure. The accounts payable adjustment, accounts payable adjustment, right over here, we try and analyze where the accounts right over here. We'll need to, it's usually accounts payable adjustment, it should be right over here. And you're saying that the accounts payable, we are saying that the 31st, the prepayments were 150 and 175 towards administrative expenses, advertisement expenses respectively. For the same period, there was an accrued amount of 120,000, like that. So we are saying that the accounts payable adjustment, we can look at note number 1. As of 31st December 2023, accounts receivable balance was 250 due from a customer who had been declared bankrupt, while accounts payable was found to have been overstated by 150,000. So we are saying that with that information, we can be able to determine that the accounts payable adjustment will be based on the 150. So we just come right over here and put 150 right down here, 150, that. We also proceed on, of course, I'd like to maybe perhaps just increase this a little bit down there, so I can insert there, down, like so you can be able to make some additional adjustments there. So after the accounts payable adjustment, we can be able to now analyze the prepayments. These prepayments which are right over here, and I'd actually highlighted them right, the 50 and the 75. And also the 120, we can be able to just make adjustments there. But what do we call them? Prepaid admin expenses. So prepaid, it was admin expenses. Let me just double check. Prepaid admin expenses. Admin expenses, yes. Admin expenses. Prepaid admin expenses. And we can come over here and put them, they're usually on the debit side over here. So we're saying prepaid admin expenses, and then we also have prepaid advertisement expenses. So you can just change this to advert expenses, advert expenses. And here we're saying we come up with the figures. Let's identify the figures right here, please. And we'll talk about 50 and 75. So we just come over here, the 50, we put over here 50, and here we're putting the 75, like so. And once we've done that, we're still proceeding on well. Yeah, it's still summing up the totals just to confirm. Yes, from there, the 50 and the 75, is there anything else that we need to adjust here? Yes, we need to adjust the accrued amounts here, accrued audit fees, 120. So for every debit, there must be a credit. So accrued, did we put the 120? Yeah, you can see here, audit fees, 120. So now we are talking about the accrued audit fees. Right here, when you put the same 120, so just put it sort of like that. After we get the accrued, excuse me for that, excuse me for that language there. So it should be accrued with an ED, not a DE, accrued audit fees. And the accrued audit fees is 120. Let's check whether there's anything else that we needed to make adjustments to. Was there some amount of interest over here? So heavy machinery we've done, preferred dividends to be paid. Dividends is 11% of ordinary share to be paid. And then you're saying the company maintains profit margin of 25%, that one over here. Do we have some interest on the debt? This is dividend, preferred dividends paid. Was there some debt that we've been told that we needed to? So here we've got the accrued balance is right over here. Yes, we can see it, it's right over here. 9% long-term debt. So we just put it right over here and state that it is interest expense here, and you're saying it's just going to be 9%. You can see 9% of 4,500. 0.09 times 4,500 right here. 45. Put it like so. Same format as these others right here. So 45. Do we have any? That is the interest expense. So interest, we expected to now make that payment, the interest payment, yeah? So interest expense, so interest payable. Interest expense is there, so interest payable should be exactly the same as that value there. So you're supposed to pay it. Then we move ahead and analyze the depreciation. The depreciation for this for the building like that. You're saying that the depreciation for the building should be how much? Let's check the depreciation for the building. We've been told 5%. 5% of which value? 5% of building cost. There, that's what you're supposed to use, 5%. So here we're going to use 0.05 times cost. You can use that, 64, and you can see you're getting 32.47 like this. So we're supposed to try as much, sure that it should be, excuse me for that, it should be here. We should use that, and we're saying we should try and of course use the accounting format and like that. 247. That's the building. So we'll try and condense it a bit. The depreciation for building. Then, of course, we've got depreciation for machinery, 10% right there. So it's 10% of machinery, 10%. And it's on reducing balance, depreciation. So we have a figure here. You can see this accumulated depreciation. So the working should actually be the same here. So you can just pick depreciation. This is machine. And you're saying we'll just pick the following. This figure there, because it's accumulated depreciation. For every debit, there has to be a credit. Is there anything else? I've got something here, preference dividend to be preference dividend be paid here. So proposed dividends, preference dividends. We need to preference dividends to be resolve that preference dividends to be paid. And you're saying the preference dividends given to us over here, we have not made any, saying that for the preference dividends, you can see the preference dividends have been given to us here. There. 10% of 5,800. Let's put it right down here. Times, it's good to always link it with the values here. There. That. And then once we have that, we also need to put proposed ordinary dividends based on this ordinary dividends. Dividend is 11% of ordinary shares to be paid. Of 12,000. So we're going to put 0.11 times 12,000. Times 12,000. The 12,000 we can see is right here. Ordinary shares. 1320. So now we can put the payable components. So there is the dividends payable. There is preference dividends payable. So copy this. Copy these two, in other words. Copy, and we put them down here. But it's not going to have enough space. We need to insert. Insert. Down. So now can copy. Right here. Payable. Preference dividend payable. Ordinary dividends payable. Payable. And so, of course, we have the opposite now, preference dividends there. And then we also have this one here, payable. Do you have anything to do with the reserves? Profit margin of 25%. So these ones have already, general reserves. So 3 million, we need to put that 3 million also. That one can also be put blue, color blue. Then you talk about reserves. General reserve. You're saying general reserve will be 3 million. It's that one. Retained profit is that one. So that's the general reserve. That. So there's an amount that is clearly we can see is not completely balanced. And so I will go back to the allowance for doubtful debts right over here. If you remember, I had picked the 222 value over here as the difference between the 522 right over here. Then we subtract the 300 component over here. So is right here, this part over here. We've not filled out this part here. Should be, I should pick 222, and then I add now the difference between this 300, and then I subtract 222. That. And then I enter. So it's still not balancing by some smaller amount over here. But what I'm saying over here, the allowance for doubtful debts. We're told that the allowance for doubtful debts should be adjusted to be 3% of the accounts receivable as of 31st December 2023. That. And then we just proceed on and try and analyze the difference between the two right over here. You can see initially this has actually changed a bit right over here. Maybe it's because perhaps I may have included something else right over here, which may not have, which was not supposed to actually be here. So we can just double check this was there, yes, all those. And we're saying that from this part, because if this doesn't balance, then of course the adjusted trial balance is not going to balance at all right over here. So this is going to be 1500. It was over there, yes. 3250. This was of course return inwards is always over there, and these values I've just picked them from outside from the income statement right over here. So just checking. See, this one has been picked from the income statement, rather from the information given to us over there. And then 2100 has also been picked. You can see even by the formulas right here. 11 and then 4700 and then 1320, 150, 300, 6300. It's picking the sum from there. So this is the side that wasn't, oh, you see where the problem is? It's right here. It wasn't picking. Now it should actually come right here. Now the difference here is actually much smaller. That one, and you subtract that one there, should be a figure of 72. And we are saying that the 250 figure here should have factored in, because we're saying the accounts receivable should have factored in that component of the allowance for doubtful debts. You remember which figure we're talking about? We're talking about the 222 right here, not that one, but we're talking about this 222 that is actually right over here. So what we should do, we should add this, you should increase this by 222. 250 plus 222, there, get 472, that. You can see still the difference is 72, it's still there. Not sure that it's picking everything. Let me just double check again. You see it's not picking that value. So we need to just double check that this value is picking everything from up there, yes. So now it's going to 222. So let's just go through and find out. So this was where the adjustment, I remember the 150 balances off with this, with the 150 right here, you can see. The 472, we are saying is just going to be a difference between, it's going to be the 250, which we have from right here, is 250, and the difference between 522 and the 300 is 300 right over here. So we get that 222 right there. That's fine. And then we can move ahead, and this value is okay. Pick that one as actually been picked, so it's 10%. added that one, that 120. 50 and 75 is balancing off with the 50 and 75 right over here. You can see the 50, 75, 50, 75. And then we have this 120. And we have bad debts written off should not be 472. The bad debts written off, we are saying should be a different figure. Which figure should it be? It should be the 250,000 right over here. So we just change it to 250 there, and that's it. It's managed to balance off. So we now proceed on and analyze the final part, adjusted trial balance. And when coming up with adjusted trial balance, is going to be much easier. It's going to be very easy, where we're just going to pick like, for example, in this case, we're just going to make sure that here. So we'll pick 400, this 4,500, and we subtract, because it's opposite, and we subtract that one there. Or then, if we put it like so, we can also add over here. If it's debit, we add, just in case you're making some changes here, we add that one there, that. So for those ones, we just up to here. That is if it's adding those values there, that's it. That. If we don't have any values there, we just delete, we just delete those ones. We delete the ones which are not being considered there. And these ones right down here. For the receipts, for the debits, we're just going to pick the accounts receivable. We add, because it's debit, we'll add if it's, we're going to add this value here, because it's debit, we add that value and then subtract that value like that, because this is going to reduce, and we enter, and then we just double click like that and see what it gives us up to there. The totals should be equal. Let's just check, we just remove these values here, delete. So there's a slight difference, ending value minus that value, difference of 150. So we just need to check what we may have missed out. And we'll just go and check, because did it include this 150? Let me see. The 150. So we are adding, so it's just going to be 4,500. Then we add this credit and subtract debit. That should be it. Should be 150. Also factored in the 150. So let's see what I've done. It should some of the values here, so I'll need to, of course, just check. I'll just check them slowly. That these ones do not need to be, excuse me, so we delete that. So the 27, and then we have the 1500, because this thing is just picking from there. Some of the values may not be picking from inside there. Okay. I don't know why I don't need that. The 250 is not. Then there's the 12,000. All of these should be working out. The credits should be working out very well. 150 should be okay. Then here we delete this. 3,000 is okay. 522 should be okay. 300 discount allowed is okay. So these ones should actually not be there. 300, then the 64, 940 should be there. Then there is 10, 300. You can see it's there. Speaking, just checking if the formulas are okay. So here is where now the error starts coming in, because you're not supposed to pick that and that and that. So what you're picking right here, so it should be these ones, not this one here. So here does not have any value here. So I delete these two. Delete those two. We don't have any values here. We have the credits, so the credits should be on the credit side. Even this one over here. So this one should be okay. Then we can be able to just see that this one does not have a credit, so we are supposed to delete the 250. So from here, these ones should not be there because we have credits. Don't have anything to do with credits. So from here, 120, we should be able to just delete up to there. Why? Because this value actually exists. This one should not exist. And even that one should not exist because we do not have any debit balances there. And then just checking, it's reducing. At least it's reducing. So here we have the 3,522. So those ones, let me see, just compare. Yeah, those are credits. These ones should be debits. Yes, it's there. These ones should be credits. Yes, then right here shouldn't have anything. We can proceed on slowly. You can see this is not 78. Should be there. This one, clear this one here. And then we also delete these ones. These ones do not have any credits. You can see debits. You can see these ones do not have any debits. Yeah. So seeing we should not have this should be right there, should be factored in. This should be not, this one that should not be there, because we're talking about this value here, and this is a debit, so it should be debited. It should also be debited. Here we should not have anything, and here we should have a credit, so this debit should go. This is debit, should be a debit. There's no credit. This should be a credit. Yes, should be a credit. So this debit goes, that and that goes together. We're seeing this is debit, so it should be a debit balance there. And this is debit, so it should be debited there. That. And we should have that. 622. So it's come down now. So these ones should be like that. So just one final check. This should be 580. Yes, that's okay. 1323,000. Then we have 1320. Favorite. So that one goes with that. That's okay. Then you're having 405, 120, So we cannot have two 150s on the same side. It's that one. And we're saying this is not supposed to be there. So it reduces it to 472. This one here is okay. We don't have, so 400 we have because it's coming from there, those two combined. 1245, 4650, 11, 382, and 20 to 197. Okay, because it's going to be those ones there. 10, 300, 69, 940. So excuse me, that one. So 300 is there. 522, 3000, 500, because that's debit, it's debit there. 150,000, it's credit, has to be credit, yes. 1,800, 1,200, 12,000, because it's there. 3250, 1,500, 100, 3,000, 27, 178, 43, 50, right there. Just check that it picks everything. It's picking everything, but it has got a small difference of 472. 472 should be this difference right over here, because you can see it's the 472 that's just right over here. So if, because we're saying that it should be credit, a credit balance here, so it should be this one that should be removed, and we have it balancing off very well. So here put all borders, and we put a border like that. So this is now, of course, the end of the question. Just now, the rest is just editing very briefly, very quickly. And you can see every figure over here is balancing. That one's just the difference between that one there. I can also perhaps bring those two there like that. This one is not supposed to be there. And I bring this sort of there. It balances off. Those two, the difference, those two, the difference, plus those two, the difference. So thank you for being with Manifested Publishers. God bless you and bye-bye.
We pick it from our